Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, it turned out to be a great end to the trading session yesterday and we recovered quite a bit of ground. We ended in the green and in fact at a 4-month high for the benchmark index.
Absolutely. Overall, if you go to see in terms of markets, the kind of recovery that we saw, Alex, was almost 130 points from the day's lowest levels, right? So clearly we've reversed those losses. And I think what's happening is we're trying to inch higher and it's a slow and steady race. So it seems that October probably could turn out to be a good month as well for the markets. But the kind of sector rotation that we're seeing, that's absolutely interesting because sectors which were laggards, they are the ones which are actually picking up steam. And it's really smaller names. If you talk about the, agri-commodity space, that's really picking up steam. Paper stocks picked up steam as well. We'll talk about it in a bit. So these are a few of the names, and the sectors like railways, etc., which have run up, have actually started to see profit booking. So that's actually telling you the kind of churn that's happening in the markets as well.
Absolutely. And what is playing out globally is also interesting to watch because several moving parts here. On the one hand, data that came out yesterday for the US points to stronger than expected growth across the board. And there are expectations, in fact, that the Fed will have to revise its forecast for the full year 2023 upwards. So in the context of monetary policy, perhaps that pushes the date further for a change in stance. And we're likely to see rates elevated for quite a while.
Right. And with this, if you see the kind of change or the difference what's happening in the US markets to the Indian markets is that all this while we've seen the broader markets that have run up in the Indian markets, right? Whereas in the US, the rallies that we've seen have been in a select few stocks and names, right? Now everyone's talking about is that are the broader markets, specifically the small cap companies, in an overbought zone? Is it really overheated where we will start to see profit booking? Yes, we have started to see signals in a couple of sectors and stocks, though the index at the index level, it's not really, showing that kind of an impact yet.
And perhaps maybe early next week, we should do a study of the implications of a weaker rupee because the rupee has also weakened. Of course, crude we discussed yesterday and the implications therein. But as I said, lots of moving parts. Let's focus on today, though. What are the key levels to watch out for in trade today?
Right, so overall, Alex, if you go to see from a market perspective, now Nifty has reclaimed its 50 DMA, and that is a positive sign as well. The immediate interweek hurdle for Nifty is seen at around 19,757. And if markets are able to stay above those 19,757 levels, then it's an all-time possibility that Nifty will try to hit its all-time high of 19,992. So these are going to be interesting levels to watch out for from a market perspective. FNO, if you see, the highest call OI is at 19,700, whereas the highest put OI is at 19,500. So these are two levels we are watching out for as well from an FNO market perspective. Looking at the technicals, if you see in terms of support, for the month, the first support is coming in at 19,160, which is then followed by 19,260 and then 18,784. But from a resistance perspective, we have 19,548, which is the first resistance, followed by a 19,646 and then a 19,744. So these are the key levels we should be watching out for as well. Let's quickly look at the stocks that actually rose with high volumes yesterday. You had names like Mahanagar Gas, Voltas, Tata Consumer Products, Petronet LNG, as well as United Spirits. All of these saw some smart moves and the volume build-up that was seen on these stocks was also pretty strong. So clearly, if you go to see from a market perspective, the stock-specific action does continue, but it's going to be interesting to see how the churn pans out and how far are we from those all-time Nifty high levels as well, because it's a slow and steady race that we're trying to achieve now. And to be noted, without the participation of Bank Nifty.
No, certainly. In fact, 19,600 was breached in a phase where perhaps it flew a little bit under the radar, right? Before you blinked and you missed it.
Absolutely. And it was just HDFC Bank from the banking pack which actually contributed yesterday.
Certainly. So let's see how that pans out in trade today. There's one particular stock from the large caps and in fact in the IT pack, TCS, that's going to be in focus today. Let's start with a check on why. The update, of course, is of a deal that was struck within the group itself. TCS striking a deal with Jaguar Land Rover, which is a unit of Tata Motors, and this is a 5-year deal. Mika is joining in to give us some of the key details and, of course, everything else. So context as well. Mika, what are you picking up?
Good morning. So Tata Consultancy Services has entered into a strategic partnership with Tata Motor-owned Jaguar Land Rover. It is a 5-year deal and it's valued at $800 million, where TCS will help JLR in modernizing and managing its digital assets and creating a new tech infrastructure. TCS will provide services like app development, cloud migration, and cybersecurity maintenance, while JLR will benefit from cost savings and improve supplier synergies, allowing them to reinvest in the company. Beyond this, TCS will also help JLR advance its vision of modern luxury client experience that is tailored to global markets. A little bit about Jaguar's reimagined strategy. It includes going electric with a $15 billion investment over 5 years, and also transforming their UK Halewood plant into an all-electric vehicle, and debuting its medium-sized battery Range Rover in 2025. Simultaneously, the Tata Group is also building a £4 billion, 40 gigawatt electric car battery facility in the UK, for which Tata Motors and JLR will act as anchor customers when the production begins in 2026. TCS has also been highly active this year with very significant deals. In February, TCS secured a $723 million contract with Phoenix Group for customer administration. In April, they won a $1 billion deal from Marks and Spencers. They also inked a 10-year contract with the Teachers' Pension Scheme in England and Wales. Then in June, they landed a $1.5 billion deal with UK's National Employment Saving Trust, and also partnered with Phoenix Group subsidiary Standard Life Partners and DAC. In terms of stock performance, both TCS as well as Tata Motors could react today. TCS has dipped 1.6% in the last month, but is up 5% year to date, while Tata Motors, although down 0.35% this month, has surged 54% this year. TCS has 24 buy, 13 holds, and 10 sell calls with a 3.8 return potential, while Tata Motor boasts a 28 buy calls, 38 holds, and 4 sell calls, including a 15% return potential.
Right. So overall, a great move that we could see on this stock as well as Tata Motors. And Alex, yesterday, if you see, the entire IT pack was under pressure, right? So probably this could help us get some bit of momentum as well in a market which is slowing down, or which is still giving signs of a slowdown. We are seeing some good deal wins for the likes of a TCS.
Thanks, Mika.
Thanks, Mika, for getting us.
By the way,
details.
small clarification, that was £800 million, and I think we've addressed all the currencies, but then we said start with dollar, we said pound, and then I think the graphics also pointed to euro, but clarifications, £800 million. There's several other smaller stocks, in fact, to focus on, and a lot of newsmakers as well. Rishi is joining in to give us some, and then we'll have the other researchers also come in. Rishi, what's on your list today?
So firstly, I have Som Distilleries. So the board has proposed to raise about 350 crores via QIP, and this is subject to the approval of the shareholders, of course. Then secondly, I have Responsive Industries, that's there in my radar. So the company has secured an order from the Garib Rath initiative from the Indian Railways. This is after recently, that is last week itself, it won another order from the Indian Railways for the Vande Bharat trains. So the company is into vinyl flooring and synthetic leather seats. So although the company hasn't confirmed yet, this is probably what the order would have been for. Then there is PNC Infratech, where its unit PNC Highways has decided to settle the NHAI dispute with a one-time settlement of 107 crores. The settlement amount represents about 65% of the total disputes amount. Then we have REC, which had an update from its AGM, where it said that it is committing to increase its loan portfolio of green projects by more than 10 times by 2030 to about 3 lakh crores. Further, it has also signed a loan deal for $100 million with the Export-Import Bank to refinance its borrowers in the power, infrastructure, and logistics sectors for importing capital equipment. It has also raised 1.15 billion through syndicated term loans in August this year to fund power, infrastructure, and logistics sector projects. Then lastly, I have Lupin, which has decided to collaborate with Mark Cuban, Cost Plus, Drugco, and COPD Foundation to bolster access to healthcare by expanding the availability of chronic obstructive pulmonary diseases in the United States. So particularly, it is focusing on the tiotropium bromide powder, as well as an 18 mcg capsule.
Good job.
Yeah, so that's going to be an interesting
It was quite
list.
difficult to spell it out, but yeah.
Well, that's an interesting list, Rishi, that you've picked up. So, interesting names we should be watching out for. But apart from this, you have a couple of, thanks for getting us the details as well. But apart from this, a whole host of large cap companies also are in focus today. You have a Tata Consumer Products, which actually saw some good run up on the back of, you know,
The
news
buzz.
reports and the buzz that was coming in that Haldiram is what they are looking to invest in or acquire. And the valuation was something which opened everyone's eyes, right?
Yeah.
I
$10
think
billion.
$10 billion. And if you see the market cap itself of Tata Consumer Products is somewhere in that $10 billion kind of a range, right? So it's interesting to see how all of these actually come up. But let's see what the company had to say and what Saloni has for us. Saloni, good morning.
Good morning. So as you said, there was news that Tata Consumer Products is acquiring 51% stake in Haldiram, but the company clarified that there is no such negotiations that is going to take place. Then we've got Reliance Industries. So the company's retail arm, that is Reliance Retail Ventures, received a subscription amount of rupees 8,300 odd crore from Qatar Holding and allotted 6.86 lakh shares to QIA. The unit also entered into a joint venture with Alia Bhatt's kid and maternity wear brand, Ede Mama, for a 51% stake. The partnership will see the brand grow into new categories such as personal care and baby furniture, children's storybooks, and animated series. The company has not disclosed the valuation of this transaction. Third, we've got Adani Total Gas that received a work order from the Ahmedabad Municipal Corporation to design, build, finance, and operate a 500-ton per day bio-CNG plant in Ahmedabad on a public-private partnership model for a concession period of 20 years. The next one is 361 Wealth and Asset Management. So the company has launched its global platform 361 Global for offshore wealth and investment advisory. So 361 is among the first Indian wealth managers to make an entry into the offshore wealth and asset management offshore wealth and asset management business as a truly global wealth and asset manager, and aspires to extend its leadership in the onshore Indian wealth market to the offshore wealth market as well. The group has roped in industry veteran Vikram Malhotra as the co-founder and CEO. And lastly, we have news on Dreamfolk Services that saw a bunch of large blocks of shares trade hands yesterday. So small cap World Fund sold 13 lakh shares that represented 2.46% stake at rupees 507.55 a piece. And Jainam Broking bought 4.9 lakh shares that represented 0.9% stake at rupees 514.13 a piece.
Right.
Okay.
And Dreamfolk is going to be interesting to watch out for.
Certainly. So thanks so much, Saloni, for getting us those updates. We've got a large cap financial company to focus on. And of course, Bajaj Finance, when do you not talk about it, right? But we're talking about the latest update, which is a reiteration of a buy call by Motilal Oswal.
Absolutely. And with this, if you see, the company was in focus, as soon as Jio Financial Services listed. And there were a couple of, downticks that we saw in terms of Bajaj Finance and Bajaj Finserv. But let's see what is in store for them from here on.
Because if you think about the fundamentals and the business, this is a company that has been registering 20%, 30% growth in loan book on a consistent basis. So, but let's talk about what Motilal Oswal is talking about. We've got Himansh joining in to give us some perspective on that. Himansh, morning. What do you think?
Good morning. So Motilal Oswal came in with the their report on their annual report, which covers Bajaj Finance's performance up until March. So Bajaj Finance, they are big on their omni-channel platform, which is something that they've been working on post-COVID. And it relates to their experience that is delivered to customers across online and offline channels. Along with improving their online channels, Bajaj Finance plans to add over 400 outlets this fiscal, which will lead to more customer acquisitions. They've also added 27 more customers in FY23, which is over 101 crores, and compared to its previous year, where they only added about 90 lakhs. And their new loans addition also grew about 20% year on year. Amongst the new customers, though, cross-selling was moderate around 61%, which was 64% in the previous year. And in Bajaj Finance's experience, existing customers pose a much lower credit risk, which is the likelihood of them defaulting on loans. One cause of concern, though, in the report is the sharp drop in the proportion of EMI card customers, which is only 2% of who availed financing across all products and services. This number used to be over 50 and 60% a couple of years back. However, assets under management have shown robust growth of about 25% year on year, and the proportion of unsecured loans have also come down marginally to 42%, along with write-offs. So this is a good sign for asset quality. Now, lastly, keeping in mind the consistent return ratios over the past, Motilal Oswal has set the target price as 8,800, which implies a 20% upside compared to yesterday's close. So that's Motilal on Bajaj Finance.
Significant upside is what they're talking about. Himaj, thanks so much for joining in. Bajaj Finance is something you should watch out for. There's another pack, of course, that Hiral mentioned at the start today that has been in focus, and that is the paper stocks. You've been looking at it closely, Hiral, and it's looking like demand could pick up ahead of the festive season, right?
Absolutely. I mean, if you see the paper stocks in yesterday's session, an interesting move that we saw, and a steady up move, right, from a Tamil Nadu newsprint to a JK paper, to a Seshasai paper, as well as an Andhra paper. All of these saw moves in the range of almost 8 to 15%. Now, overall, if you go to see, the rally in India has continued. What is the expectation is that the demand is firming up ahead of the festive season. Apart from that, the proposed syllabus change, in terms of schools, which is going to NEP 2020, that change is also expected to actually come in as a tailwind for all of these paper companies. And usually this October to March period is a strong strong quarter with regards to where the sales of paper companies are concerned on a historical level. So these are the three factors that we are relying on the back of the rally that we are seeing. But how much will this rally sustain is what we need to wait and watch. But interesting one in terms of paper counters.
So a lot of these sectors, right, and news-based. So you're talking about sugar counters, which we should again do a bit of research on and bring our viewers some updates there. You talk about cement, which we just spoke about. We talk about the paper stocks. So like Hiral pointed out at the start, a lot of churn happening and a lot of individual stocks in focus. We'll bring you all of that news and updates over the course of the day. And do stay tuned. This is BQ Prime.